Let's take a look at posting to the ledger, the third step in the recording process. The recording process is analyze, journalize, post to the ledger. Analyze is where you consider the transaction and the impacts it has on the accounting equation. Journalize is writing the journal entry, and then posting to the ledger is transferring that information to the ledger. Here we have a set of transactions for Brightex Solutions. You might want to pause the video and read through these transactions. Let's just look at the first two. In number 1, the owner invests $10,000 in cash to start Brightex Solutions. In this case, the corporation is receiving money and it creates common stock, so we debited cash, credited common stock. In the second transaction, Brightex Solutions buys new computer equipment, paying part of it in cash and a notes payable for the remainder. So here we debit equipment for the full cost of that equipment, credit cash for the $2,000 used, and credit notes payable to create that liability. Now, if you need more help on journal entries, be sure to check out my other videos because this one is focusing on the next step, which is posting. So here we have the complete list of transactions and the completed journal entries. So now that we've analyzed, journalized, we can post to the ledger. So what is a ledger? The general ledger is the entire group of accounts that are maintained by a company. And within that, each account has a ledger, which contains the debits and credits and helps us calculate the balance of the account. So posting is the process of transferring the journal entry information into the ledger. There's two main types of ledgers. There's the long form and there's the T account. Notice the long form has a transaction number, or it could be a date, a description, and 3 columns, debit, credit, and a balance column where we're calculating the balance. The T account is more of a short form, and it's called a T account because it has the name at the top and then a left side and a right side. Notice both of these are for my cash account. It's just two different types of ledgers. And again, that T account is your shorthand version, and it has our debits on the left and our credits on the right. Every account, no matter which type, has its own ledger. And for every account, if you do the T account, the left side is the debit side and the right side is the credit side, because debit means left and credit means right. So now let's look at posting to the ledger using T accounts. Here's our transactions again. And our first one used 2 accounts, cash and common stock. So cash was debited, so we posted on the left side or debit side of the account. Common stock was credited, so it goes on the right side or credit side. Next, we move to our next transaction, which also includes equipment and notes payable, so we pull up our ledgers for those accounts as well. And we post, my equipment received a debit, my cash a credit, and notes payable a credit. Now at this point, we could calculate our balance in our cash account. So see, the journal entry tells the story. We bought some equipment, we used some cash, we created a liability. While the ledger here helps us know how much cash we have at this point in time. Next, we can post transaction number 3. Cash received a debit, accounts receivable received a debit, and service revenue a credit. And you continue on through the transactions, posting each one to the ledger. Debits go on the left and credits go on the right. Each account has its own separate ledger. And again, the ledger is helping us to calculate the balance in those accounts. After we've posted all of our transactions, we can also look at our basic accounting equation and see we're still in balance. Our assets equals our liabilities plus stockholders' equity. So we've posted everything correctly. Now let's look at some tips for posting to the ledger. So first of all, debits on the left, credits on the right. It doesn't matter if it's an asset, a liability, a revenue expense, a stockholders' equity account. The left side is the debit side, the right side is the credit side. We also want to make sure we're posting in order. Notice how I went through each transaction in order and posted it. My cash account is in order. Even though debits are on the left, credits are on the right, they're still in the order that they occurred. We also don't leave empty spaces at the top. Notice that my cash account does not have holes in it. Everything is pushed to the top of the account. Any holes you may have because there's more debits or credits in an account will be down towards the bottom. We also do not add up both sides of the debit and the credit column. Instead, you're calculating the final balance. Now, since cash is a debit normal balance account, it increases with debits. We're going to add up all the debits, subtract all the credits to arrive at that ending balance. And it goes on the left side or the debit side because there's more debits than credits, as there should be in a cash account, which is an asset. Now, all of these rules are true for all types of accounts. So here I have accounts payable. Again, the left side is the debit side, the right side is the credit side. In transaction 5, we credited that account because we owed some money. Let's add another transaction here where we're paying off part of what we owed. So we would debit accounts payable, credit cash. If I post this then to my accounts payable account, it's going to get posted on the left side or the debit side. Again, I'm not leaving holes. It's at the top just across from the other transaction. And again, I can calculate that ending balance. In this case, the account increases with credits, decreases with debits, and so that ending balance is the 200 on the credit side. Okay, I hope that helped you with the posting. Be sure to check out my other videos.